Hello, my name is Washboardjim. I'm the founder of the Sneaky Snake Trading Strategy, where I talk about chart patterns, moving averages, and being in the now. My videos are just for educational purposes only and not for financial advice. Just trying to show you how to trade, how to get in, and how to get out of a stock. So I'm the Sneaky Snake Trader. If you can count to 3, you can trade with me. If you can count to 4, you just might learn to make a little bit more. I see the setups others miss. I follow the data. I master the market, and I dominate with discipline. So this is my strategy that I've come up with. Case study, 10 SMA, 20 SMA, 200 SMA, crossovers, supports, moving averages with chart patterns with Washboardjim. So I'm using the 20 SMA, the 10 SMA, and the 20 SMA crossover with the 200 SMA as a support level and a resistance level, more or less as a pivot point to take the trade. So we had a bull flag. Let me show you what a bull flag looks like. It's usually a downward pattern from an up position when they go down. Now if the flag was going up, that would be a bear flag. So this is a bull flag. You might not think so. Was scalping it inside the channel all the way down, got stuck once, took a big loss and had to make that all back up, and I did pretty good on that. I was down like $1,200 and I made it back to 4 on my P&L. And that was I'm minus 400 on my challenge account right now. But last week was just all practice with this new strategy. I started a challenge account to learn how to trade this strategy. And it's with a prop firm. So we'll see how that goes. Most millionaires and billionaires trade with other people's money. I didn't know if you were aware of that, but that's how it works. So we have the 2-minute time frame, and as we started to break out of this channel, we had 2 engulfing green candles, and this is what I tell traders. Let's remove this here drawing. When it breaks out of the channel, wait, it's caught your attention. It's caught your attention. So you know that this thing might be getting ready to move, but always tell everybody to wait for the pullback, wait for the lower price to get in the trade. They always try to pull back unless we have a parabolic run. Now I was flipping over from the 2-minute to the 1-minute on this time frame. And what I noticed on the 1-minute was a leading indicator that this thing was going to break out. And here on the 2-minute, I'm just now starting to learn these 2-minute candlestick patterns. And we had a tweezer bottom with 2 engulfing candles, and it pulled right back. I got something in my nose that's itching. And then we had the 10 cross over the 20 SMA, and that's the buy indicator. So as it pulled back, I was ready to take the trade, and I took the chance, and then we went ahead and had 3 white soldiers. 3 white soldiers is a continuation pattern, but usually they consolidate. So what I did is I sold it on the pop. I made like $260 just in a matter of minutes. But this coming week, I'm going to try to stay in the game is to stay in the trade longer. And as I stay above the 10 SMA, I'm going to stay in that trade. I'm going to stay in that trade no matter what it takes next week to get these big numbers out. This ran from $4 all the way to $2,000. And I had 2 contracts. That's $3,000 profit in this run. So I've got to tell myself next week and discipline myself. Part of my strategy is discipline. As long as I'm above the 10, I'm going to stay in the trade. Once I start to crack below the 10, I'm going to sell it. I'm going to get out. I don't care, because by this time I've made a real good profit, and I want to dial that in. On the 1-minute, I'm using both time frames just to kind of go through the process. So here on the 1-minute, we had the breakout of 3 white soldiers. And then it came back and retested right. It's more of a cleaner chart, in my opinion, using the 1 minute, because I can see a lot more Here on the 2 minute, okay, here on the 1 minute, you see a head and shoulders. You see a head and shoulders. That's bullish. And you see it leading out with 3 white soldiers. So you know this thing's getting ready to break out. And I'm waiting for that thing to come back and retest that right shoulder. I'm coming back to see it retest that support level off that previous resistance. That's what I call out in this trade. Wait for it to pull back and hit that previous resistance, and then check the candlesticks. And we had us a little spinning top doji right here. And boom, she just started to take off. I was already bullish because of the 3 white soldiers on the breakout, but I hesitated, and then we had the 10 cross the 20 SMA, both of them, and that was the ideal to take that trade right there and keep in it. Stay in it until it stays above the 10. As we hit the 200 would have been a good exit idea. It would have been a good exit idea, and that's what I did. I got out of the trade. I got out of it before that. Last week was just trying to catch the crossovers. This week, I'm going to try to stay in the trade longer. This is going to be a 2-week case study. It might go on for a month because I'm really liking this strategy. So as we come up, we had 3 black crows, and we weren't completely yet bearish. We came back and touched the top again for your exit idea, because we had these 3 black crows. 3 black crows, I traded 2 different ways. Here on the 1 minute, I would have took the scalp and run it up to the double top maybe. But I play this in different time frames. On the weekly and the daily, if I see 3 black crows, I'm getting ready to do a swing trade. But it's a bearish indicator, but I've found out that it's more of a bullish indicator if you know how to read the charts. We had 3 black crows, we had a bounce. We had 3 black crows, we had a big bounce. You got to look at them candlesticks. There's a hammer and there's a tweezer bottom. Then we had the crossover. And once she crossed over again, we had another breakout at the end of the day. I did scalp something in here. Scalped at the end of the day, I scalped right about 241 to 242. Then I had this other one. So 241, right there, I got into the trade. And 2 minutes later, I got right back out of it. I wasn't comfortable. When you're not comfortable, manage your money and get what you can. Or as a beginner, create good stop losses. Don't take a big loss. But as a professional or an advanced trader like me, a novice trader, I'm going to go ahead and cost average down and then take that big run. If I feel like I'm still bullish. So here at approximately 155 to 158, 3 minutes, I went from 570 to $7 and made 260. And that was at 155. So at 155, right here, right in here, right in here, right when that crossover happened, I jumped in that trade. And I had the pullback, so that was like the perfect setup. And a few minutes later, I jumped out of it with 3 white soldiers. And then right after that, man, this thing ran up to $2,000. And I went, shit. But it's all a learning experience. This week, I'm going to stay in that trade, run it up to the 200, maybe scale out. As long as I'm keeping above that 10, I'm going to hold that stock. Then once I break down below the 9, the 10, SMA, I'm going to pull the trigger. I don't care. I'm going to get out of the trade, lock all that in, because that's the first indicator that this is going to be a pullback. We don't know what kind of flag it's going to be, but we know we had 3 black crows. And we're going to get out of that trade because we don't want to take a chance of it have a continuation down to the downside like it did right here. And then I jumped back in it right here and sold it for at the end of the day run. Just a few extra dollars to kind of build that account up. So that's it. Case study, the 10 SMA, the 20 SMA, and the 200 SMA crossovers. We had the crossover when we crossed over the 10 and the 20 SMA, crossed over the 200, gave it more bullish character. As long as you ride that up, you stay in the trade. That's this week's gamble. And if it pulls back, I'll use that 20 as a support, and if that doesn't hold, then I'll buy a put. As long as we're below the 10, I'm going to be bearish until we cross over the 20. And we have the 10 and the 20 crossover. Then I'm going to become bullish. I'm going to ride it like that. I scalped this. I had so many fake outs, and it went on all day long. And I got stuck in this trade. And I didn't sell it. I bought more. I cost average down. If I didn't cost average down, I would have had a good $600-700 loss. It was at about $700 down. So I went ahead and added on another, I think I tripled it. And it went down to 12, and then I was down. It kind of hovered around that spot, and then it started bouncing back up, and I was able to get out of it with just like a $400 loss, $300 loss. And then at the end of the day, I made all that back up plus 200. But I did get stuck. And I saved myself a couple $100 by cost averaging down. I was down $600 or $700, and I got it to 400. So I was happy about that. And I did a couple other trades where I did stop out at a real small loss. And then I held a couple where I took a couple good little bitty gains and then had some pretty good runs. So I'm the founder of the Sneaky Snake trading strategy. This week we're going to try to keep it above that 10, and we're going to be watching that 10 for keeping it bullish and bearish in the trade. And I wish everybody a great week. This is the Sneaky Snake trading strategy where I talk about chart patterns, moving averages, and being in the now. Have a great day.